What's the difference between an annuity and life insurance? And there is a massive difference. So this one, you probably want to get a pen and paper. And I brought an expert, Jason Henderson, who is my partner in Annuity Systems. We're going to talk about the differences of annuities and life insurance. And I'm going to dig deep because the fee structure on some of these are astounding. And a lot of you don't pay attention to what the commissions and fees are. You just blindly walk into something because you're being pitched something interesting. So I'm going to interview Jason about three things. Understanding the core purpose of an annuity versus life insurance and when they're appropriate to use. Number two, the benefits of each instrument. They have different benefits in your financial planning, and a lot of it depends on you. Depends on how much you want to learn, how passive or active you want to be, or you just want to check every month. It's up to you. But your goals are going to be different at the end, I can promise you. Big ROI difference. And then the last one are the mistakes you make and just the lack of awareness that so many people walk into these vehicles and don't know how to use them, improperly sold, and now you're stuck. So don't be those people. Let's listen in. Jason, welcome to our interview. So Jason Henderson, welcome back to our conversation here at our YouTube channel, where we're talking about annuities versus life insurance. So let's start with the description. So what is the purpose of annuity versus the purpose of life insurance? A lot of people think they're like one thing. They're not even close.
Primarily, an annuity is being sold to people as a source of income in retirement, whether that's period certain or for their full lifetime. That's what they're buying into. Oh, I'm going to have this reoccurring amount of money. Where life insurance, believe it or not, has that function. It also is leveraged into a death benefit. Now, annuities can have somewhat of a death benefit to it. However, the leverage is nowhere close the same. With a life insurance policy, your death benefit is going to be much greater than what it would be with an annuity.
So for financial planning purposes, describe when you would do life insurance. I think it's both of our opinion. I'll kind of speak for both of us and I'll let you elaborate. Is the earlier the better? When is an annuity even appropriate?
Annuity might be appropriate later in life. Even then, I would take a real serious look at a single premium life insurance policy that can act very, very similar to annuity. There's different in commissions there, yet the life insurance policy would probably be the better choice. Now, that's a case-by-case basis. We're painting with very broad strokes here. That's why we need to have a one-on-one conversation and determine what is actually best for you at your time in life.
So talk about a little the pros and cons of an annuity. I mean, clearly anyone who's somewhat educated knows that whoever's selling it to you, it seems to have really large commissions. So foregoing the commissions, I mean, what are the other benefits? Is it just because they get a fixed income later in life?
Largely, yes. There's also qualified annuities. So there's can be some tax advantages up front, but you're paying tax on the back end. One of the things about annuities that really cause me concern is that it locks up your money, right? Yeah, okay, we're not going to talk about commissions or anything, whether they're higher or lower or anything. Most of the time in an annuity, in the event you put in your money and then something drastic happens, or you really need capital, there's surrender penalties, and they can be much as 10, 15% in the first 10 years. Well, people need access to the money. That's not the case with a life insurance policy that's designed for cash accumulation. And I'm telling you that when you design a whole life insurance policy for cash accumulation, it has many characteristics that are similar to annuity. That cash value can be annuitized. You can do things that way, right? Yet you don't have the restrictions and the surrender penalties. You have access to your capital day one.
Wow. That's awesome. So do describe that, though, because again, one of the objections I hear, and I'm always explaining about what we do together at Annuity Systems. So again, go to annuitysystems.com. There's a free report that explains this thoroughly. There's a free chapter in my book and another book. So there's some gifts for you, as well as there's a schedule to get on Jason or one of our top experts' calendars to really understand the difference. But I know you've said in other videos, which, by the way, go to our search bar, and if you just look up life insurance, you're going to see a whole bunch of videos with Jason and I, and describing this, but I do want to just bring into this content the cost or the misconception of I have to pay for my own money. And I love the example you've given about, a mortgage. It's not your own money. You're using other people's money, but describe that, because a lot of times people hear or misread the content and say, why am I paying for my own money?
You're talking specifically when you take a loan against your policy. And you're right. A lot of people think that that's not the case. And that's one of the things about why life insurance that's designed for cash is such a great wealth building tool in two senses. One is you can use OPM, other people's money, for the fact that you are using your cash value as collateral for a loan from the insurance company. I can take my same policy into a regular bank and they will take that cash value of my life insurance as collateral for a loan from the bank. And then I pay them principal and interest, right? Similar kind of thing with your HELOC. It's not your own money. You're taking a loan from the bank using your equity in your home as the collateral. That's really what's happening.
Interesting. So again, if any of you have questions, I've been doing this for a very long time. My son's 24. We'll be meeting with Jason in the next month. And yes, you say, well, that's too young. No, it's not. He learned that. He's actually one thing really good that he learned in his finance and accounting class, which you'd be impressed with, Jason, was the need for life insurance young, and then really build that as an asset over your lifetime. So make sure you go to insuresystems.com and get on Jason's schedule. Also, while you're here, I want you to subscribe to our channel. Make sure you are here 5 days a week. It's an educational channel for families. So if you haven't got our journal, there's a link below to get our learning journal. So they're literally designed per video, per topic. What day do you watch it? Who was on it? What are you going to do? What did you learn? So you build an action plan over time using our learning journal on our YouTube channel. And if you have any questions at any point, go to askloral.com, ASKLORAL, ask a question, make a request. We are here to totally help and serve you. And Jason, while you're out here, because he contributes heavily to our Millionaire Intensive, I'd like to give him 2 tickets, sorry, not 3, 2 tickets to our Millionaire Intensive that's coming up. We do it about every 3 weeks. And if you haven't been there, learning to live corporate life and really understanding how the integration of these strategies work for you and your family is pivotal. Before we leave this video, though, I want to make sure we add in the most costly errors and misconceptions around annuity use and life insurance. Like, what's the biggest errors when you see people making that decision or comparison?
The biggest mistake is not having some life insurance, right? There's a little bit with annuity, yet what you need to do for the fact of what it does intergenerationally, right? The very, very wealthy families, as soon as a baby is born into that family, they are buying massive amounts of life insurance on that baby. With life insurance, the longer it's in force, the better and value it has, and the better it has the ability to gain cash, and the better tax advantage it is. When you have an annuity, most people think, this is a solution for me, Johnny come latelys, or people that have procrastinated their whole life and say, I need to hurry and make up. Even though that's a hurried decision. It's a short time mentality versus generational thinking. That's what I see as the biggest mistakes.
I do too. So again, any questions, go to askloral.com, and we're here 5 days a week waiting for you and your family to start taking some action instead of just saying, I'll get to it. And life insurance is typically one of those things that's like, I'll get to it, and you don't get to it. So insuresystems.com, go to the links below, grab a strategy session, and follow through with Jason immediately before the end of the year. We're filming this fall of 2023. And Jason, thank you. Appreciate your time today.
Thank you.
And the rest of you will be back tomorrow morning.